What's going on, guys? Today I'll be talking about why today was a no trade day for me personally and why it should have been a no trade day for everyone. And I'll be explaining how to trade conditions where we are stuck between different points of liquidity and different liquidity pools. So to start off with, obviously I took no trades today, so I'm up $0. And I'd like to draw your attention to this. So when market opened, which I'll go on the 1 hour time frame, it will become more clear. We had this 1 hour bearish fair value gap. As you can see here, I'll mark it out. And along with this, what we saw was 30-minute fair value gaps within this. So also 15-minute fair value gaps within this. And this was obviously all before market opening, which was at 9:30. So obviously, from the get-go, actually, today, I was looking to see an open, high, low, close. So I explained this yesterday. An open, high, low, close. I was looking to see something like that. And obviously, we did not get that. But what we did have is, if you look at the 4 hour chart, with this massive bullish fair value gap, along with this intermediate low. So, why would you short, if you look at the 5-minute chart, why would you short into a 4 hour bullish fair value gap? It doesn't really make sense. Whilst we have 15-minute bearish fair value gaps to the upside, it didn't really make sense for me. It was just very low probability. We were stuck between different liquidity pools. We had fair value gap. This is the 15-minute chart now. I'll draw a fair value gap here. Geez, this is all very choppy up here, but we had one right here, which kind of got mitigated. But then you can see we had this bearish fair value gap mitigated, then bullish fair value gap here, mitigated. Choppy conditions. We didn't really have a clear bias, and little do you know, when market open happens at 9:30, we start coming out of that fair value gap. And if I draw it on the 30-minute time frame, you'll especially see what I'm talking about. Sorry. With this fair value gap, I'll just draw it the full range here of fair value gaps. We were stuck between two different fair value gaps. No clear direction. And I can't emphasize this enough. There was no clear direction going into the day. So, what happens? We break out. We move to the upside. We kind of go a bit down. There was an inversion here. Some people did take that because, I mean, for some people they thought that they saw a load of low resistance liquidity here, failure swings here, here. I'll just draw the failure swings. How do I do this again? You got my point. We had failure swings here, here, here. Low resistance liquidity all across here. It was a textbook short. However, 4 hour bullish fair value gap. We are inside that 4 hour bullish fair value gap. In fact, we just respected it. When we took out that intermediate low, we just moved to the upside. Sure, there was a data low here, but I just didn't really see that happening. And we come up here, inversion here, people took the short, and you would have got stopped out. No matter what you'd gone for. You would have gone one ticket drawdown, and then you would have gone one ticket profit. So that's the first thing. And from here, I know some people took longs because actually we just basically mitigated this 15-minute fair value gap and we'd respected this 4 hour bullish. You could have taken longs. I personally still didn't because there was this fair value gap here. I'll just draw it out. Here's fair value gap up here. We were down here. So I personally didn't see the point in taking longs. You could have done so. I didn't. But what do we see here? Another textbook setup. Accumulation, manipulation, inversion. And right into that 15-minute fair value gap. What ends up happening? We just move right up. Today was a very low probability day because liquidity pool here, price was simply ranging down, and we ranged up. Respected that for a moment. Loads of people got stopped out. And then we continued moving higher. Low probability day. What we saw here again at between 10 to 10:30 was trendline liquidity was formed. You could have taken this long here. You would have gone break even, or maybe even stopped out. Just in general, low probability. So, how do we trade these conditions? We simply don't. That's I mean, that's my personal opinion. You can't really expect, because we could have very well respected this and taken out the data low. Look, we data low here. I'll mark it out. Right here, data low, Trump candle. We never went for that. So, I mean, we could have very well done that. However, there is another way to trade low probability conditions, which is you have to analyze the gaps which are being mitigated and the gaps which are, especially, you have to look at gaps which are being respected and gaps which are disrespected. And that's how we can draw bias in low probability conditions like today. So, let's apply this concept here. What do we see? We see this 4-hour gap is respected. I'll go on the 4-hour chart just to show that again. 4-hour fair value gap right here. We respect it, especially the CE, the consequential encroachment. We respect that. So, what do we disrespect? Well, if you look up here, we had this 30-minute gap, followed 2 30-minute gaps actually. Did we have a 1-hour gap? We did actually have a 1-hour gap as well. What happens to that gap? Immediately into market open. That gap is disrespected. So, bullish gaps are being respected. Bearish gaps are being disrespected. What does that mean? That means we're bullish. If it was the other way around, if this gap was disrespected and this gap was respected, we'd be bearish. However, that was not the case. So, I'll write it out here. If bullish gaps are being respected and bearish gaps are being disrespected, like today, we are going to be, obviously, bullish. And if we're bearish, it is going to be simply the opposite of all this. Bearish gaps will be respected, and bullish gaps will be disrespected. So, I'll draw an example for all of this here. I'll just use the example for today. Let's say we've got a 4-hour gap here, and we've got a 15-minute gap here. Let's say price comes in into this 4-hour. We respect that CE. We move up. We disrespect that gap. That means that we are bullish. And you can take longs, continuation longs. Now, what about the opposite scenario? Well, we would have a bearish gap here and a bullish gap here. Price is coming up from that bullish gap, comes into that, touches the CE, and just disrespects that gap. And obviously, we can take continuation shorts. This is a way in which we can trade low probability conditions. However, there is a big part to this. If the gap here must be a 4-hour gap, a 1-hour gap. It can't simply be just a 15-minute gap being respected, because that's too insignificant in my opinion. You need to have a proper gap, a proper strong gap, a large gap especially, being respected. So, you could have traded this. I personally didn't, and I would recommend that you wouldn't trade it. And that's how you trade low probability conditions. I hope you guys enjoyed this video. I know it wasn't exactly a trade recap, but it was a market condition recap. Let me know what you guys want to see next, and I'll be back tomorrow with a trade recap. Good luck.